Hey everybody, welcome back to another beautiful week in the real estate market. Everything's starting to get a little bit more exciting this week. We'll dive into it here. We have a few things we're going to go over, but we're going to mainly talk about the war in Iran. We're going to talk a little bit about interest rates, a little bit about oil, and then we're going to start discussing again, and we're going to continue the conversation of why it's getting more and more concerning in paper assets, okay? So let's jump in. Excuse me. First off, interest rates are slightly uptick today. Moving into the week, I believe these are going to kind of come back down tomorrow morning. As we're hearing, there is a very important talk coming very soon with Israel, Iran, and the United States. Most recently, we got something that came through that basically said, well, we'll just pull up the article, or the headline, I guess. The president of Israel, I can never say his name, so I'm going to call him the president of Israel, just told Trump he intends to launch a major attack on Iran. Trump made it very clear the U.S. will not participate if Israel goes ahead. America is out. The moment of truth has arrived. So those of you that don't know, there was one bill actually that was presented last week, and subsection 21 of some whatever, they were talking about how they wanted to merge military and software development with Iran. And that was caught very quickly. They said absolutely not. Crazy. I don't even know who put it in that bill. I haven't looked too far into it, but it sounds like that ally partnership is starting to fizzle a little bit. So they're trying to implement some way to keep them around. There's a lot of conversations being had around that yet. Again, a lot of it's hearsay, so I won't really speculate too much. But it does seem like there is a bit of knuckle rubbing, head rubbing, essentially across the board with the United States and Israel. We're trying to make a deal with Iran. They keep trying to bomb Lebanon and continue to cause more issues instead of prevent them. So, there's always a bigger thing at play, but we'll kind of play it by ear as the week continues. So I did pull up WTI crude oil and Brent crude oil. I think we're going to start paying attention to both of them. I pay attention to WTI just because I got started in there. It makes sense to me. I already know the charts very well, so I've been paying very close attention to them. We also changed our candlesticks to green and blue instead of purple and green or whatever, or yellow and blue, excuse me. After some time, you just got to kind of change it up a little bit. But what I'm seeing so far is, again, we are seeing double top, lower top, lower top, lower top, and now we're kind of consolidating. We're starting to see more volume kind of slowly reaching its end. It's almost like it might be gearing up for another leg up, honestly, when you start to see this. But at the same token, we look at Brent crude oil and we saw the higher high, lower high, and now again we're consolidating. So the only other thing is that we're starting to see volume start to trickle down slightly, right? So it started up here at the beginning of the war. It's a clear downward trend, which is good. But it's all fully dependent on the fact that does the United States reach a deal with Iran? I mean, we're very close to it. It feels, it's been feeling like this for weeks now. I don't know exactly what's going on behind the scenes, but again, it sounds like we're getting very, very close. I'm hearing there's concessions being made about unfreezing assets in Iran, and everybody's saying it's going to be this big problem and yada yada. I'll be honest with you, I think that's just going to be part of the deal, right? So what a lot of people don't understand about negotiations is the give and take that happens. Now, in real estate, it's very important to understand you relieve emotion and you focus on the fact. And it's all about a little bit of how can we make them win a little? How can I make that my person win a little, right? When I'm representing a buyer or seller, I'm not looking at anything other than getting the deal done and making both people happy. And that's some realtors are very particular. They're gonna go for the jugular every time, right? And yeah, you might win a few deals. You're gonna lose a lot more negotiations that way, but you're gonna have an opportunity. But the thing with Trump is he's been in real estate for such a long time, and that's why I use the reference. He knows how to make a deal work so that both sides feel like they won. And that's the cocktail to a perfect negotiation, right? I'll bet you all the money I have that he already had that factored in before he even decided to negotiate. Because the thing is, again, it depends on one thing, right? The first thing in a negotiation is who wants it more, right? Whatever we want to believe what's on the headline news, let's ignore that for a second, right? They're going to focus on how can we make each other win here. It doesn't matter what they say in the news, doesn't matter what all the memes where they're rubbing heads and AI videos and all that fun bullshit. It comes down to who's winning and how are they winning. And when it comes to the negotiation, I think that there is going to be concessions made because in Trump's mind, he's going to think, well, they thought I'd never give them this. So if I give them a little bit of this, they're going to really feel like they won this deal, even though, we got exactly what we were hoping for with the United States. I think that's part of what's happening now because they need a deal. Again, they need a deal to happen sooner rather than later. Every day the Strait of Hormuz is closed, we have more and more issues and more supply chain problems, more in you pay attention. You see that oil reserves are at the lowest they've been across the world. And Trump did come out and say he was going to refill ours after the deal's made with Iran. But my point is right now we're in a negotiation, and I think both sides are trying to win a little bit here to make everything happen, and then they can save a little face, they can go out and do the thing, and then we're off to the next race, right? So oil is starting to move down. I expect if we hear any more good news today that we're going to see it kind of fall again tomorrow morning. Below $95 a barrel, $92 a barrel is kind of that support. So we'll find out. But right now we're in that channel, that consolidation, $100 to $92 a barrel. That's like a perfect consolidation. $100 is always going to be that psychological level. So either we're going to break above it or we're going to stay below. But right now we've seen 2-3 rejections after $100 a barrel for the Brent crude spot. My guess is we're more than likely staying under there for the time being. Stochastic RSI doesn't look too strong, neither does the RSI. So I'm expecting we're going to keep moving forward. Now, moving into the beginning of the week, the S&P 500 did find its first sell-off in quite a while, a pretty big one, in fact. I think it was a 2% sell-off. Let's see where we at. Yeah, about a 2% sell-off that happened, and now we're starting to kind of recover. Now, we broke out of this channel. We've talked about this channel quite a few times. This channel goes all the way back to 2009. We'll touch on it every single day because it's very important. 2009, we've been in the channel. Major moves happened right here, March. This was the COVID era. This was the end of the bull market era into 2021. Then we see right here, what was it? Tariff wars happened here. And now we saw the beginning of the war in Iran, and then the market ripped. So, I mean, all of life events happening, isn't it kind of crazy how it all bounces relatively within that channel? Like trading is interesting because there are patterns that happen no matter what. And it's crazy because you can almost anticipate those patterns. You may not know exactly what's going to happen, but you are going to understand, excuse me, you are going to understand what to expect, the probability of what comes into trading. Now, people can sit here and argue, say, I'm an economist, I know everything. No, you don't, first off. But number two, it comes down to understanding the probability behind it. You're not always going to be right 110%. It's silly to imagine that. But it's crazy to me that we go all the way back to 2009 and these channels are doing the things, right? And it's crazy also how that retracement, which, it needed to happen. The market's been on a tear for a couple months now, a couple weeks again. But it bounced perfectly, absolutely perfectly off of that and turning it into a support. If we see a double bottom here, I mean, this is a pretty hefty sell-off. So good chance we come back into that channel. No guarantees, but right now when you see a sell-off of that significance, the reason is I'm going to play this harp until the day I die. But, we are starting to see, the cracks starting to expand a little bit in the economy and in the stock market. And I will tell you why. It's because a company that even hit earnings, God, I can't remember it. I heard it this morning, but even a company that hit earnings made it drop like 10% over the weekend. It hit its earnings. It hit where it's supposed to, hit the goals, hit the quarterly numbers, and it still found a retracement of 10%. Why? Because when you're in a blow-off top scenario like this, you have to exceed expectations to continue to see the growth. And that comes to a point where it halts, right? And referring back to the dot-com bubble, the same concept happened, right? Companies over expectation, they went into a bull market. These bull markets went and moved because it was the next big thing. And then that bubble popped. Now the AI bubble is getting close to popping because you have so much hype and expectation behind it. And there's not enough real world solve yet to provide that value. So you have the expectation versus the reality, and there's a gap that will need to close. Like everything else in trading, well, this is kind of a perfect view. So oil has erased all of its gains since the open, now trading at $94 a barrel. Iran announced the end to military operations against Israel. Again, Israel's trying to pull the plug here. Israel's kind of like, let's keep going. But what I wanted to point out is look at the gap. So like I said, we didn't know this was going to happen. And this was what, the 7th? So this was over the weekend. But Brent Crude took a nice spike and then fell back, and it's going to close below $92 a barrel today. I will put money on it. It's going to close around $92 a barrel today unless something happens to change that. And what I mean by that is no matter what in the market, the gaps have to be filled. It's not as simple as just answering a question, and then solving a problem. There are certain rules in trading, and they're not always followed, obviously, but 90% of the time, these gaps need to be covered. So my reference point is, again, in AI, if the expectation's here, but reality's here, there is a gap that will need to be filled. So that's what we're paying attention to. When is that gap going to be filled? Because respectfully, just like real estate, right? Real estate took off 2020, 2021, and 22, 23, 24. It started to slow down. We've seen corrections in different markets because, again, the value exceeded the expectation exceeded the value, right? And even now, people are talking about the crash of the real estate market. It's happening. No, it's not happening. What's happening is people are starting to realize that their homes are overvalued. Now you have to list them at a market value. And there was a Ricky Caruth video where he talked about it. He said that everybody's saying, oh, you have two options as a seller. And I mean, you're not wrong. You either pull it off the market or you mark the price down. Every customer client I sit down with and we talk about listing their house, I harp on the importance of listing at a correct market value. It doesn't mean your Zillow estimate. It doesn't mean what your neighbor sold for. It doesn't even mean what you bought the house for 4 years ago. And you start doing math in your head, well, 3% increase, blah, blah, blah. Here's where we should be. It is what somebody is willing to pay at the time for your house. So if you're not willing to list it at a price where somebody in this current market is willing to purchase it, that's where it gets mucky, right? That's where the stickiness comes into play. That's where most realtors fall short. It's because when they sit down with people, they don't have a plan to explain to them, hey, we're listing your house at example $500,000 because that's what it's worth. Well, my neighbor's house sold for $525,000. Well, my other neighbor sold for $550,000. Oh, I bought it for $400,000 in 2020, so it should be worth $550,000 as of now. No, it's not how it works, right? So people are going to justify logic, or they're going to justify something in their head to justify the price, just like anything else. And the realtor doesn't have any sort of rebuttal, any sort of answer other than, well, let's list it and see what happens, which is a very dangerous game to play. And a lot of realtors do it. But you list a house, you want to make sure it's at market value because those first 2 weeks are the most prime time to be listing your home. Again, I explain all this to my clients. I say customer and clients, customer for builder, clients for real estate, realtor side. But I explain to my clients that you guys, the first 2 weeks is the most prime time to hit the market. Yes, we are going to do a pre-list inspection. Yes, we are going to do professional photos. And yes, after 2 weeks, we're going to reevaluate where we're sitting. And a lot of people don't want to hear that, but also a lot of people do respect it because, like I explained to people, listen, you can go with the realtor down the street who's going to list your house for $25,000 higher. I don't care. That's up to you. My goal is not to beat out other realtors. It's to give you the correct information to make an educated decision. And when I sit down with you, listen, all these realtors are going to try and buy you by saying your house is worth this, your house is worth this, your house is worth this. But I guarantee if you ask them, how do you plan on selling my home? They're not going to have a strong answer behind it. And that's where that's the big mistake, right? Realtors think that as soon as you get a listing, somebody will just come along and buy it. We'll just drop the price until it happens. There is no structured, here's how I'm going to do it. These are the steps, and this is how we're going to get it sold. My partner and I, we sit down for listing consults, and we do phenomenally well. Almost always, we hardly ever lose a listing consult, and it's because of the way that we structure it. The way we structure our marketing, the way we explain and break down how we are going to market their home and the cost of marketing their home. Commissions are rarely a conversation of discussion. We explain what we do and then we say, this is our commission. No, very rarely does somebody say, oh, I need it to be less than that. Those people are typically deal hunters and they're always going to press on you. But the majority of them are very like, yep, that makes sense. I understand why we're doing it this way. And once you can provide that value, that's where you become really successful in this industry, right? You have to, I'm starting to work on building investors now for different capital funds. And when you sit down with an investor, right, it's nothing more like, okay, let's just tell a story real quick. I got a few seconds. Let's tell a story. So I'm working with a customer now that's building with me. They came in with an agent. They fired the agent. Why? Well, the agent was a very soft-spoken agent. Very sweet person to work with, very good person to work with. But they don't have that, this is how it is mentality. This is what it is. This is how we're going to do it. This is what's next, et cetera, right? That's where a lot of people fall short in this industry as well, as they're very very scared to have that opinion. Me personally, I don't care because really I know what I do. I know how well I do it. So I'm not going to feed you a bunch of bullshit because really it's going to cost me more money and time to list your house at a higher market value than it is to convince you and help you understand we need to list here so we can sell it. My goal as an agent is not to list homes to have them. My goal is to list them to sell them, right? So even when I'm working with a buyer and we're negotiating, I explain in depth every decision we make and why we make it. But that's anyways, that's what I'm trying to get at right now is that this market right now kind of went off on a tangent. But my guess is we're more than likely seeing this AI bubble coming to fruition here sooner rather than later. There's still time. It's still not like tomorrow it's going to fall off. But the blow off top is coming, and it is kind of here as of now. We're starting to see it, especially with the S&P 500 taking off the way it did. It went off and ripped because the 20% of companies that are using AI are significantly growing right now. And when I see major moves like this in the stock market, this is where I get nervous. Again, stock markets are not built to be up 50, 100%. Understanding the stock market, we're not going to dive into it a lot, but there's a book called holy buck, what's it called? The Intelligent Investor. It's been a long time since I've read it. Very, very boring book. But it explains that anything over 10% is a hopium dream that doesn't really exist. And relatively, it's right. I mean, you see more than a 10% return, it's too good to be true. Chances are it is. I'm not saying that it's impossible. I'm saying it happens quite often, but that means that we're closer to a market top than people may realize. It's get in, get out, make your money, and move on. It's a gambling, and it's gambling in itself is what it is. And a lot of people don't want to hear that, but Warren Buffett said it best. He said this is the worst gambling market he's ever seen. And I agree. When people are willing to put their life savings in and leverage their houses, their mortgages, take out money out of savings to throw it into a stock because somebody on Twitter, Instagram, Facebook said it was worth buying, dude, it's all gambling. It's all gambling. I went and played blackjack twice this week and lost $200. Probably shouldn't have sat down at a table. But here's the thing. When you sit down and you understand that it's gambling, it feels a whole lot different than when you lose than when you're trying to say it's an investment, right? But anyways, we're seeing major moves. And my point of this was to jump into the next one, which was the S&P futures took a nice little rip this morning. Why? Because they're saying that Israel has no choice but to accept a deal with an Iran. We also saw futures on the mini NASDAQ, which up 1.5% after the talks about Iran. Now, the NASDAQ is a textbook rejection of the 3-year trend line. Each of the prior eventual drop way down to the 200 EMA. So I don't talk about the 200 moving average very often, I'm not I don't trade a lot like that, but I do pay attention to trend lines and the longevity, right? So, and I don't even know this is the daily chart. So the daily chart starts all the way back here in 23, peaks. Again, it's crazy how these trend lines kind of pay attention to themselves, but my guess is we're more than likely going to see a move down. Not quite yet, but again, we're getting close, right? You can feel it. You can feel the energy. If you can remove the emotions for 15 seconds and look at the reality of what's actually happening, I can feel the market starting to crack at the tips, if it makes sense. And I don't care what people say. You can argue and be snotty and post a dumb comment. I really don't care. My TikTok gets a lot of dumb comments, and I love every second of it. It brings more views for us. But thanks for the feedback. But the bond market is also starting to break again. Yields are exploding across U.S., Japan, UK, Europe as investors dump government debt worldwide. This is a whole nother conversation in itself. But right now, you'll notice especially that a lot more money is moving out of bonds and into gold again. People want security. They want sovereignty. And the bond market just doesn't provide it anymore. People don't believe in it. People don't feel it anymore. And that's going to change over the next few years. People are going to go back into hard assets. As we transition to digital currencies, there's going to need to be some sort of revolutionary change. And they will digitalize bonds. When they digitalize bonds, they'll make them appealing again. People will buy them. But right now, they're showing that the system no longer works. They're proving the fact that you need hard assets. You need to understand the currency battle that is happening behind the scenes right now and right in front of our faces. Again, it's not a conversation we'll dive into today, but the currency battle that is being witnessed right now is the complete shift of a world economic perspective that has been in place for over 100 years. We're getting to that point where it's going to change. It's going to be different in a decade from now. The way that we operate, the way that our IDs work, the way that our phones work, the way that our purchasing works, our money works, our banks work. 10 years from now, they're going to be completely different. And a lot of us have not had that conversation or understand what that even means yet, but we're getting there. Now, right before we wrap up, there's one more thing I was going to touch on. This is again, when I see companies like this, Nvidia looks unstoppable, like the Cisco did before the dot-com bubble burst. Warns TS Lombard. So my point was just to pull up this. The article itself is irrelevant. I don't really care, but my point is companies like Nvidia that saw insane amounts of return over the last few years are getting to a point where they are overvalued and their product doesn't exceed. Yes, it's very valuable. We're not in a super cycle, and everybody wants to look at it. Wow, just because Nvidia does chips and computers and blah blah blah, yeah, it's going to be the best company for the rest of all eternity. Let's keep buying at all-time highs and hope it goes up. It has to get to a point where that market corrects. It just does. It's nature. It's how the world works. So until that changes and we see tons of money flowing back in, my guess is these stocks are showing their true colors right now, which is we are hitting earnings, and now we're starting to see retracements even at positive earnings, which means these companies are overvalued. So we will see that progress over the next couple of weeks. Mark my words. More companies are going to come out hitting earnings, and they're going to lose value because the value and expectation exceeds each other. So the expectations here, the values here, as I've said before, till that gap comes back down and we start to move in tandem again, this market is overvalued and it's dangerous. Be safe out there, trade safe, have a plan set in motion. Thanks for watching. Make sure to like and follow, and we'll see you soon.